Hello everyone, my name's Dean and let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 7th, 2024. And Bitcoin's doing almost exactly what we said it would do. Even though I have a high degree of confidence in my experience and all of the stuff I've learned about markets and high probability moves, it's still shocking. I'll use the word shocking sometimes, just how well some guidelines, some principles are respected in markets. So yeah, basically what I said last video, the video before last, and the video before that Bitcoin's doing exactly that. We went from our base right here at around 68.7, and we pumped. We made an all-time high, and we can't seem to get past this level right here. And this level is the $76,000 level. And there's a cap, there's a hard cap on this particular chart. Every chart's going to be a little different based off of, the exchange that you're using. But on this particular chart, the invalidation of that read, of that, that trading theorem is 77.4. And it seems to be that the price just can't crack this. You can see there is a rollover happening. A rollover is basically when the price really wants to make a higher high, but it loses steam every time it touches, and it usually looks like an asymptote, a parabolic. Is it a parabolic? Yeah, it's a parabolic asymptote. Something like this. It's been a while since I've been in math, but it looks something like this, where the price is trying to get higher, it just can't do it, and then it eventually results in a rollover. What's surprising to me about this particular move in Bitcoin is just how close we got to this invalidation point, right? And the invalidation point is the absolute maximum that the price can go to, and that on this that represents the 1618 of this A wave as I've measured it. And I don't think this is such a difficult A wave to measure. There's not too much ambiguity in that, so I'm quite confident in that that phi ratio at 77.4. I kept looking at it thinking, oh, maybe I measured it wrong. It can't be that because it's so close to it, but it just tells me two things. One, it's amazing how consistently markets follow these rules. If you're able to read the market correctly, these rules that people have, these principles that people have come up with 100+ years ago still hold true in these markets. Why they're respected, I have no idea. I keep asking myself that, why is that a rule? Why is that a thing? Why can't somebody just buy a bunch of Bitcoin and break the 1618? Why can't that happen? I don't want to go there. That's a whole nother topic. Second thing it tells me is Bitcoin is extremely bullish. Okay? Because if you're printing a B wave, okay, so this is A wave, B wave, C wave, right? If you're printing a B wave, you're typically coming to about the 1, 2, 3, 6. Let's pull that retracement tool again, so you can see what I'm talking about. So you're typically coming to about the 1, 2, 3, 6, maybe halfway up the 1, 2, 3, 6, but you're not really flirting too closely with the 1618 unless you're super bullish, because there's too much selling pressure in a bullish move with a B wave, unless you're super bullish, in which case, remember I talked 2 videos and last video as well about this high probability likelihood that we're in what we call a running flat correction, meaning this retracement is likely to happen like this, okay? For people who finally get that we're likely rolling over, they're going to target down here. And they're not going to expect this to be the target. But given everything I've said, that the environment, the context of this price action is extremely bullish. There's a lot of buying pressure here. A lot, right? And before even when we were down here, I said this B wave was going to come up here. It was going to break the high of the A wave because given the environment, given, what people said about the election, the FOMC meeting, just everything in the zeitgeist, it seemed very likely that we were going to make a higher high and we were going to print that running flat correction. And that's exactly what we're doing. This is playing out exactly as I said, and that rarely happens because, especially in an environment where there's corrections, there's just so many different permutations, combinations. So I'm actually surprised. Not to say that I'm a bad analyst, but there's just so many different possibilities and probabilities. It's tough to pick the right one. You usually just read and react, right? You're wrong, you see what happened, and then based off of that, you find the highest likelihood, the highest probability, likely scenario, and then you go with that, you trade on that. But rarely do I see 2-3 moves ahead of time and say that's likely to happen, that's likely to happen, that's likely to happen. But this is exactly what happened. Not for new subscribers, I don't do this all the time. Trust me. Not to say that I'm a bad analyst, but that is not a frequent occurrence. But this is exactly what's happening. Your running flat is coming up here, making a higher high, breaking that high of the A wave. If this is the case, there's more likelihood that this is our target, that C wave, and it's not coming down here. Reason being, you're usually printing that running flat looking like this. And I can even put a time component on this, not to say that this is hard and fast, but it's again based off of probabilistic observations in the market that we make a local market bottom next Friday or next Sunday. So Friday is the 15th, I believe, Sunday 16th, 17th. So Sunday or Monday, the 18th. So 0 to 3 days after the full moon. So the full moon, I believe, is on the 15th, which is on Friday. So we may bottom out on Friday, start consolidating here, and make the lowest low on Sunday. That's what I'm seeing based off of everything that's happened. So that's Bitcoin. Basically, it hasn't diverged from our thesis or trading thesis of some days ago. And again, that's not something you typically see. But that's kind of the nature of this business. You're usually wrong, but it's not about being wrong. It's about mitigating risk, mitigating loss, and being able to read and react if you read something wrong because, there's so many different possibilities and you chose one probability, but there's another thing that happened. Based off of what you're seeing, you can readjust. That's really where the skill comes in of a good technical analyst, in my opinion, not necessarily somebody who has a magic crystal ball. So that's Bitcoin. Really nothing else to say because we've literally hit it spot on. And again, that doesn't typically happen. Now, for altcoins, this is also kind of an easy read. And here, it's time to take profit on altcoins. Most altcoins. Not all altcoins. Most altcoins. There's always going to be an outlier that runs, when everything else is going sideways. But on most altcoins, it's time to take profit. And I'm going to show you exactly why. Okay, I'm on the total 3 chart. Let me fix my chart. Okay, here we go. I'm on the total 3 chart representing the totality or the amalgam of altcoins on TradingView minus Bitcoin and Ethereum, okay? And you've reached the top here, the top of this inverse, well, not an inverse head and shoulders, this bullish reversal pattern. It is an inverse head and shoulders right here, but I like to say just a bullish reversal pattern. So you're at the top here, and what you're likely to do is come right back here and retest the midline of this range. That's simple. I mean, it's quite clear to me. It's clear for multiple reasons. I'm gonna go over why it's clear. But for like the takeaway, not financial advice, but financial advice. I took, the best profit I've taken in a long time on this run in my altcoins. And I'm preparing for this move right here. Because very clearly and cleanly, we were in this range for quite some time, okay? And quite some time is precisely 50 days. 50 days in a sideways range, okay? You went to the top of the range, you broke the range, you showed that you're intending and you're likely to break the range. But first and foremost, and I talk about this ad nauseum on the channel, before breaking a range, either to the top or the bottom, proper adequate retests must be made of the base support and the top resistance, and then finally, last but not least, the midline. This is exactly what's happening right now. And it's actually even more clear than that, because this move is purely impulsive. What's that mean? So there's a bunch of moves that go up and down, but they can be corrective moves. And in Elliott Wave parlance, corrective moves typically just retrace upon themselves. Boom, retracement upon. It's noise. It's almost impossible to trade properly because you're coming way back, and any stops that you may have put are getting hit. And there's so much variance. There's the probabilities of going up or down and how much you're going are so vast. It's really difficult to trade profitably, okay? Almost need to algo trade it. But manually trading it, maybe with some indicators, maybe with a large number of, with wide stops, you can do it. But it's not really profitable trading. It's washy trading. Washy trading, meaning you go up, come down, go up, come down, go up. Nothing really gets done. The opposite is true for what we call impulsive motive waves that actually pick a direction and go. This is one such wave. Characteristically, they look more orthogonal, straight, erect, direct. They are resolute in their motion, and you can see very straight lines from this bottom that was a nice strong wick to the bottom, and then boom, a little consolidation, boom, a little consolidation, boom. And another aspect of or characteristic of these waves is that you can typically count 5 waves. 1, 2, 3, 4, 5. You can count some 5 waves, like you can count 2 major areas of consolidation, intra-wave consolidation, that wave 2 and that wave 4 area, and that wave 5 is an exhaustion. And then you can look at your indicators, and it typically will show some exhaustion of trend. So on the hourly time frame, I think this is adequate to look at this. You can see that we've exhausted the trend. And on the top, you'll typically see a break of structure. That break of structure will either break the 618, which is a really easy telltale sign, and you can see that in some altcoins in the market, where that initial break of structure went past the 0618 of the preceding uptrend. That's almost, because there's no way that an uptrend is viable, that it will continue if the 618 is broken. That's something we talked about when we were analyzing Bitcoin, and why we said we were likely in a corrective pattern and we were going to put in an ABC flat correction, right? So that's a principle that is consistent and you can see over and over again. But sometimes you'll hold the 0618 in that initial break of structure, but what you're going to see is something like this. As you can see in the total 3, you'll see a lot of consolidation at the base. So it's basing, which is not something you typically see in a proper motive wave. A proper motive wave, you can think of it as a guy or a gal that has somewhere to be, and they're a fast walker, and they're not looking and seeing, who else is walking across the street, and they're not taking in the view. They're focused. That's a motive wave. It's focused. There's no dilly-dallying. If there's a consolidation, if they have to wait at a walk sign or at a stop sign, they'll wait at the stop sign. And then when the walk sign's on, they'll go again. But they're not going to wait any longer than they have to. Okay? This basing multiple times is not something you see in a proper motive wave. That denotes the end, and that denotes a retracement. So expect this to come back down here to the middle of this channel. Once altcoins do this, it's very likely that we go again, and that is a big move. This right here is going to be massive. Okay, and there's actually an easy way we can, based off of Elliott Wave principles, we can estimate, we can try and predict or prepare ourselves for when this will happen. Okay, how do we do that? So in Elliott Wave theory, wave 1, which this would be the first motive wave of a big move, okay, because this move theoretically can go on for a year, 2 years. It doesn't stop. It basically will go and then go retrace, go, retrace, go and retrace, and it'll keep going. That's the phase, that's the season, that's the environment you're now in. This asset, these altcoins, and you can see this very clearly in Bitcoin dominance. Look at this. Bitcoin dominance hasn't done this, and I talked about this, and I said almost verbatim, you're going to see a big break of this rising wedge, and you're not going to be prepared for it. So the best thing to do is prepare for it, because we're chopping up, but what's going to happen is it's just all of a sudden going to break, and once it breaks, it's going to break. That's exactly what happened. This hasn't happened in 4+ years. Once you see that, this is the phase of the market that we call Altseason. This is the phase of the market that I affectionately like to call making it season, or the promise of cryptocurrency, the promise of being able to invest small amounts and make outsized gains that you would never see in the S&P or the in penny stocks, even in any other asset class. Gains that are legendary, that the small person without a stockbroker can make it and find financial freedom. That phase of the market is now active. This is what that Bitcoin dominance is showing us. And actually, it's way easier than corrective price action. I wouldn't say it's easy, because it takes some experience to be able to read with a high degree of probability and trade, right? But it's so much easier because there's so many more guidelines and confines and principles that guide and restrict the broad number of possibilities that can happen in these emotive markets, in these impulsive markets. There's no rhyme or reason for how these corrective markets look. They'll go up and down. Obviously, they respect certain rules, but it's hard even to read what happened, to be able to measure the phi ratio of a corrective pattern, to say, oh, it's not going to retrace that much because the phi ratio of that corrective, you can hardly tell what's what. Okay, it's like a jungle of price action. Here, it's clean. So I digressed, but what you would do in wave 1 is you would take the time it took to go up. So precisely on the hourly time frame, using this total 3 chart, we can tell that on the 4th, so at 5 p.m. on Monday, we started going up collectively. Okay, remember, this is the aggregate total 3 chart. This is also an indicator. It took us 2 days and 4 hours, okay, more or less, to get up to our target, which we're at now, and that's approximately, on average, a 14% move. That's a big deal. Okay, you don't get those kinds of moves, and this is a nothing small move in crypto. But I mean, 14% in the stock market, and you know, people's heads fall off. But that's the first move of the alt season, if you will. Okay, that's 14% up. Took 2 days and 4 hours. Okay, according to Ralph Nelson Elliott's theory on waves and motive waves and impulsive waves, that wave 1 typically takes about the same time to go up as it takes to come down. And I, in my experience, have seen that that's only the first wave 1 that you can confidently say that about. So this is kind of a gimme, because subsequent wave 1s, there will be subsequent wave 1s of varying degrees, right? If you know anything about Elliott Wave, you have it's like Russian dolls. You have the first wave 1, and then you call that a name, and then the second wave 1, and the third wave 1 of a smaller wave, or a larger wave. A smaller wave that builds on itself. So you have to sometimes clarify which wave 1 are you talking about. You have to clarify the degrees. In my experience, this time component is most reliable in the first degree of the move, which we've just put in on Monday, November 4th. Okay, so if you measure from the top, which was on Wednesday, and again, that didn't take long, 2 days, 4 hours. That's usually how it goes with these motive waves, with these impulsive waves. Boom, 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 boom. Let's get to our target. Let's retrace. Then let's go back to work. Okay, that's a character of the price action, and it's gonna go for months. That's how you get those crazy gains in the alt space. So if we measure 2 days and 4 hours approximately from that time, well, we're gonna be more than approximate. We're gonna be exact here, but just maybe it's exact, maybe it's not, maybe it's off an hour or two. But that would mean that Saturday at 1 a.m. Eastern Standard Time, you can expect this to bottom. Okay, now in my experience, sometimes that means a retracement that comes, and on the hourly candle it starts running again. Sometimes that means on the hourly candle it bottomed, and then you have to add a little bit of consolidation before it runs again. I've seen both. But this time component thing is scary accurate. Okay, and the amount of retracement you can expect is quite simply using the Fibonacci retracement tool, usually in that first wave. And you can read all of this, I'm not making it up, you can read all of this in most Elliott Wave manuals. I have a few listed in the description that I thought were excellently written and particularly useful. But any relatively good, serious manual on Elliott Wave theory will tell you all of this. Maybe not the time component. The time component, there's only a few. Prechter and Frost talk about the time component. Not many people know about the time component. So, yeah. But the time component's a thing. So, Saturday at 1 a.m., around here. This is typically where you can expect that wave 2. So this is wave 1. This would be wave 2. The wave 2 typically takes around the same time as wave 1 took. And it'll come in between the 0.5 and the 618. Okay, so we can expect if Bitcoin went up, if altcoins went up 14% from Monday, November 4th at 5 p.m., we can expect it to come down, about half that much on Saturday at 1 a.m. Okay, and that's actually consistent with what we typically see on weekend trading, right? Weekend trading, usually Friday into Saturday, bearish, and then Saturday evening we start bottoming out and gaining some momentum, and then Sunday, if there's a momentous move, if there's a move up to the upside on the weekend, it typically happens early Sunday into Sunday, and then starts going crazy late Sunday at market open. So this is what I'm seeing. This is the most useful thing that you can take from this particular episode. Everything I just said for the past 10 minutes, I don't know that many people do know it. Again, the most useful thing you can do is not just watch these videos and take my word for it, but go into the description of all my videos and go read the books that I'm citing that you can have on Amazon. Some of them you can maybe even find the PDFs for free online. Don't take my word for it, don't take anyone's word for it, but figure it out yourselves, and then backtrack, backtest, look, analyze, read these charts and see for yourself, gain the experience, gain the confidence to be able to trade actual money behind these theories. Because it's one thing to paper trade or to say, oh, that sounds nice. It's another thing to put actual money and trade what you know about the charts. That's a whole different thing. That's also something you learn. Trading and reading, they're not always the same. Some of the best readers are shit traders, and some of the best traders are horrible readers. Very few can both read charts and trade, in my experience that I've seen. Anyway, that's all I've got. Yeah, that's Bitcoin. That's altcoins. I hope this was helpful. I hope this was useful. Like, share, and subscribe. If you got value, consider buying me a coffee at the pinned comment below, or ordering an altcoin analysis. I think it's $10. You can do that at the Buy Me a Coffee website, and I'll have it to you within 24 hours, mostly. And I'll see you next time. Take care. Bye.